Thursday, September 12th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about the debt in the world, how the debt is insurmountable, not only government debt, but corporate debt and private debt, and how the debt is so important to the system as it relates to money and credit. Before that, of course, I'll have a look at where the markets are going. We continue to see a good performance by the stock market yesterday. NASDAQ was up about 1%. The Dow and the S&P were up about 0.75%. Overnight, we've had more backing down from Donald Trump in this trade war. It looks like the guy wants to just get the stock market higher, and that's the only thing he has in mind. So he's actually delayed some tariffs on the request from China. It says here in the FT, U.S. President Donald Trump has postponed the introduction of higher tariffs on Chinese goods until October 15th in a rare goodwill gesture as the two economic powers gear up for another round of high-stakes trade negotiations. So that's the trade negotiations supposed to start again on October 1st. A trade deal was supposed to have been reached on March 1st, 2019. So this is where we are in terms of this mess out there. And I'll also comment on some stories that came out yesterday, some tweets by President Trump. So before that then, let's look at where the markets are this morning. It's 8:20 a.m. London time. We've got actually spot gold back above 1500. We're at 1502.50, up $5 or 1/3%. Silver is up 8 cents at 18.19, up just under 0.5%. The Dow is up 69 at 27,200. It has been about 100 points, 120 points higher. I guess that the news about Trump delaying tariffs to October 15th helped. But now the stock market is drifting back lower. S&P is up 5 points, just above 3,000, 3,004. So they've gotten the S&P back up above 3,000. This is the future, of course. It's up 0.2%. NASDAQ up 25 or 1/3%, 79.08. The currencies, sterling up 0.1% at 123.38. Euro 110.18, up 9. Before I go further, today is the ECB meeting. Very important. There's a lot of opinions. About the markets is that the markets are expecting a lot of like a bazooka out of Mario Draghi. It is his last meeting as the president, and yes, if he there's a question whether he's going to deliver a bazooka or a water pistol, right? In terms of stimulus and lower rates. I see an opinion piece by David Kelly, who's a JP Morgan global strategist from the asset management department of JP Morgan. He's saying more easing will make the world weaker rather than stronger. Cutting interest rates from already very low levels is likely to suppress demand. The thing Mr. Kelly doesn't point out is that the reason they've had to keep rates so low and print so much money for the last decade is to keep banks like his, JP Morgan, afloat, right? So now he's like saying, oh no, this is, so just wanted to say that. So there's a lot of, how can I say, the people who have benefited from all this largesse of money printing, zero rates, negative rates, the speculators, the banks, they're all coming out now and saying, wait, that's too much now. This is not going to work. But they don't realize they wouldn't be around at their jobs if this hadn't happened, right? So at least it seems like they're starting to wake up and see that what's going on is not going to, how can I say, keep things going. All that the lower rates and the QE does is increase the size of debt. That is a burden on economic activity. I mean, it's normal. If you don't have any debts and you work and you earn an income, you're free to do a lot more than if you had to pay interest every month, right? And it's the same thing for the economy. So that's out there. ECB meeting 12:45 a.m. That's when they announce today, and then the press conference is at 8:30 a.m. New York or 1:30 p.m. London. So back to the currencies. The yen, the dollar is up 0.1 against the Japanese yen, 107.92. Dollar is dropped against the Chinese yuan, almost 0.5%. We're at 708. Crude oil, WTI, 55.85. So we've seen that the price of crude drop in the last 24 hours, but it's still up 1/3% from last night. Brent is at 60.57, up 1/4%. Bond markets, that's the other thing. President Trump keeps trying to drive the stock market higher. And of course, that's driven yields higher lately. We've seen a rally in the stock markets. And at the same time, we saw yesterday some tweets he made, which I'll come to in a minute after I look at the yields here, which make no sense. If he wants a higher stock market, he's going to have higher interest rates. So let's see where we are right now anyway. It's all very, very confusing, of course. The 10-year yield is at 172, so that's down 1 basis point. The 2 years at 168. So the curve is positively sloped right now by 4 basis points. So it's not inverted. So yeah, I saw the tweets he made yesterday. I haven't got the tweets up, but the FT caught up on it. It says, Trump says Fed boneheads, and I quote, should cut rates to 0 or lower. So what is it you want, President Trump? Do you want higher stock market prices that point out to stronger economy? Strong economies don't need 0 or negative rates. Strong economies have normal interest rates. So I'm not sure what President Trump wants. So this is what he said, and I quote from the FT. Donald Trump renewed his attack on the Federal Reserve, calling for the boneheads at the central bank to cut interest rates to 0 or lower to enable the U.S. to refinance its debt. And here I come to the debt again. You see, U.S. Public debt right now is almost up to 23 trillion. So yeah, that's what Mr. Trump is talking about. He's running 5% or plus budget deficits, which will increase the debt at least by 5% a year. So the U.S. has got a debt problem. The U.S. is a debt junkie. I'm not saying other countries aren't, but so that's what Mr. Trump is looking at. He's also talked about that if they get rates lower, then they can refinance and issue longer-term debt, which Mnuchin has been talking about, right? 50 years and 100-year debt. So Mr. Trump, President Trump, does he want to really make America great again when you're actually trying to, how can I say, lumber the American public with more and more debt? That's what it looks to me that he's trying to do by calling for 0 rates or negative rates. He wants to punish the American people with more debt. So that's why I don't understand why people think he's making America great again. I think seems to me like he's a menace, or I don't know, he's trying to play some game. Some people say it's 4D chess, but it seems to me that he wants to keep this perpetual debt game going. And all that's going to do is it's going to increase the debt. It's going to slow the economy down. The only way to get out of this debt trap, of course, is to write off the debt. Politically, that's impossible because aside from the national debt, public debt, the Uncle Sam owes 125 trillion in unfunded liabilities. So the only way to make this debt more affordable, not only in the US, but the rest of the world, is to reset the system. And I've talked about this many times. Maybe some of you who are new to the channel haven't heard me talk about this. Precious metals, especially gold, is the monetary asset that in the last few thousand years is always used to rebalance the system. And what does that mean, rebalance the system? Well, it means that, short of repudiating the debt, which is very deflationary, you can inflate the debt away by letting the fiat currencies drop or sink massively versus gold. And why gold? Well, because gold has been a standard of value for thousands of years, and many sovereign countries own a lot of gold. So that's why China and Russia are buying so much gold, because they know that's coming. And that's why I personally have tried to accumulate as much physical gold and silver as I've could in the last 15 years, because I've known this is coming, because I've studied the system for many years. So that's what Donald Trump is talking about here. So what else does he say here in the FT article? The US president has been on a multi-month offensive against the Fed and its chairman Jay Powell, saying that their slowness to ease monetary policy was harming the domestic economy rather than any direct effects from his trade war with China. Well, the other thing I'd say, you've got unemployment rate, which of course many people say it's phony, and I agree, but this is what they use. They say the economy is doing great. We've got 2 to 3% GDP growth. The stock market is at all-time highs. Why do you need zero interest rates, President Trump? Anyway, it says, Mr. Trump said via a series of tweets on Wednesday morning, and I quote, "The Federal Reserve should get our interest rates down to zero or less, and we should then start to refinance our debt. Interest could be brought way down, while at the same time substantially lengthening the term, so indebting Americans even more." He went on to say that the USA should always be the lowest interest rate, and that in an environment with no inflation. Well, I'm sorry, Mr. Trump, you've got massive inflation. That's why the national debt is going up so much. That is inflation. That's what money is nowadays, and I'm coming to that right now. In this fiat currency system, the national debt is what backs the money. So the other side of the money is the debt. If you look at your dollar bill, or $5, $10 or $20, $50 bill, it says it's a note. It's backed by U.S. Treasury debt via a note issued by the Federal Reserve. So you do have massive inflation, Mr. Trump. And he says it was only the naivete of Jay Powell and the Federal Reserve that doesn't allow us to do what other countries are already doing. A once-in-a-lifetime opportunity that we're missing because of boneheads. As you've seen, under a fiat currency system, you need ever-increasing debt to keep the economy going. What about under a gold standard? You might say, isn't there any debt? Of course there is debt. There is credit under a gold standard, under a system where there's no central banks. And the US, by the way, didn't have a central bank from 1837 to 1914. So it is possible. The only thing is that the credit and the debt is more limited because there's a gold anchor. Under the current system, that's why it's become such a bubble, because there's no anchor. And they can create this debt, ad infinitum. And that's why they're having to artificially keep rates down to zero or even negative, and they're doing that by creating even more debt, because you can only buy the bonds to drive yields down by creating more bonds. So it's a mad monetary experience. It's going to end in tears. And how's that going to translate into in the real world? Well, it's going to translate into misery for the general public, because their fiat currency is going to become worthless. And that's why you need the protection of precious metals. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.